the soul of the Cayman Islands.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. The Chamber Pension Plan is asking for all members to ensure their member details and contact information is correct and up to date. To review and update member details, simply visit chamberpension.ky. Log into your account and provide the necessary information for your personal profile and for your beneficiaries. For assistance in updating member details, call us at 745-7630 or email admin@pensions.ky. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.
Money Sense, bringing an informed financial perspective to the Cayman community.
A very good morning and warm welcome to Money Sense. I'm Simon Cawdery and I'm delighted to be joined in the studio this morning by Minister Andre Ebanks. Good morning, sir.
Good morning to you and good morning to the listening public and Caymanians overseas.
Excellent. And also Jean DaCosta. Jean, you are the, if I get your title right, the Government Representative for Financial Services in the UK and representative for Asia as well for the Cayman Islands.
Correct.
Whereas Minister Ebanks is known to everybody who's a listener of this show, Minister of Financial Services. Possibly, I dare say, possibly the most important ministry given the prevalence of, I'm kidding, the prevalence of financial services, but that's the topic of our show today. Now,
they're all important.
Yes, indeed. You guys have just returned from a trip to North America, to Washington and to New York. And I think it might be useful to start off the show with a conversation as to what you learnt from there, what you heard from people when you were travelling in those places, as it pertains to what Cayman's role is and how Cayman's doing in the eyes of the general population. So just give me a bit of feedback as to what happened on your trip and who you spoke to and what they said to you.
So the purpose of the trip, and I think it's a great question, was that Cayman Finance has a New York breakfast every year. I think it's been running for about 8 years. But of course, just like everything else, COVID paused it. So this was the return of that breakfast event since the pandemic, the outbreak. And it is usually centered around a time in which there's a few New York conferences that go on anyway. So they know that there are New York stakeholders that are up and are ready to go to conferences and engage. So that's been the historic pattern. And I think Cayman Finance saw no reason to deviate from that. So with the now inclusion of a new CEO, Steve McIntosh, they planned a breakfast and a series of engagements for the ministry to talk to industry stakeholders, which goes to the root of your question. And from Monday, Tuesday, and Wednesday of that week, which was about 3 weeks ago, and then we took the train from New York to D.C. for Thursday and Friday of that week, and that was to open and launch the D.C. office. What I think we found was excitement, and people just couldn't, by people I mean New York industry stakeholders at the breakfast who were very excited to see Cayman in person again. Of course, they've been liaising with their counterpart service providers throughout the pandemic, but nothing, in my view, beats face-to-face engagement to really entrench relationships.
Enough of the Zooms.
I think they had enough of the Zooms. So I think we were met with excitement. I think we saw interest in a number of areas. The breakfast was well attended. I think there was maybe only, 25 to 30% were Cayman residents who came to attend. Overwhelmingly, the audience were New York stakeholders. They were in investment funds, they were in structured finance, they were in reinsurance, they were in directorships, they were a wide range of stakeholders, and they just love the country. They love the people, they love the efficiency of the service, they love the efficient way in which we evolve to changing rules, which impacts the entire globe, but the way in which Cayman has learned to master and tailor rules and get information out to folks, they absolutely love our products and they couldn't wait to see us. So I don't think I'm exaggerating. Gene to my left was in attendance, but I think it was thrilling. In addition to that,
And that's the industry side of things. Those are the
Yeah.
people who literally pay money to Cayman to have business doing here. So that's great from the future looks bright in that sense from a people want to do business with us perspective.
correct. So that was the morning because it's a breakfast event. Same day on the Monday, Cayman Finance put together and organized a reinsurance roundtable because we're seeing that as a growing line of business.
Because that's historically been captured, excuse the pun I suppose, but by Bermuda. That's been the center of reinsurance for many decades.
Yes, and it's an interesting space, but for a number of reasons, we're starting to see that we are being looked at as a viable alternative. I still think Bermuda, as you say, that's sort of been there to them what investment funds are to us. But I still think that we're now being viewed as a viable alternative for several reasons. And that event was pre-pandemic, was a much smaller event. It's been tried a couple of times. This time it was much larger. I think there were 106 attendees who were serious reinsurance businesses or advisors to reinsurance businesses and set out similar tones at what we hear from structured finance and investment funds. The regulator is strong. They ask good, valid questions, but they work hard. They assist with getting licensees over the line. The service providers are fantastic. Emails go out at 1 a.m., 2 a.m., which, as you know, the speed in which New York moves, they move at those times. And they love the responsiveness of our service providers, and our legislation seems to be efficient and tailored. So from that perspective, I think we left, all of us, not just ministry, not just Cayman residents who are insurance professionals, but even the regulator, left with sort of a boost of confidence that it's a space that we can participate in.
And what about, so that's business saying positive things, which is unambiguously optimistic for the future. But business can only operate within the framework of what politicians and regulators tell them they can do. And different politicians around the world have different views on Cayman. So you went down, I think you said, you took the train down to DC, and presumably you saw some people who are in the legislative area, whether it be advisors or politicians. What is their perception of Cayman? Because the US has always been historically relatively friendly in terms towards Cayman. There's the occasional hyperbolic statement about tax havens, or I think we were saying before about John Grisham novels. So there is that. But are politicians still in the US still favorably disposed towards Cayman?
So to take a step back, the purpose, as I mentioned earlier, for the trip was to establish and launch the DC office, and importantly, to have meetings to begin the network of stakeholders that Chris Duggan, who's going to be the representative for North America, can build on. So prior to this, the Ministry of Financial Services, for years gone by, have taken trips to DC and engaged. So now it's transferring those relationships and those networks that the representative can foster and continue to build on day to day on the ground. In that context, we not only saw lead congressional staffers and advisors, we also saw departments. We saw the U.S. Treasury, we saw the State Department. And I think although they may have had bespoke questions on particular issues, my sense is that they have gotten a greater understanding of Cayman and a greater knowledge of us having an indirect tax system that's consumption-based, that wasn't designed specifically to attract business. It's been that way, in which we are able to produce tax-neutral products. And from what I could see that sort of knowledge sinking in. So they were no longer questioning that. They were questioning how that framework will operate with rules that are coming up, like, say, for example,
15% minimum tax rule.
Correct. And our answer to that, which I don't think I saw any secondary questions to or received any secondary questions to, is that should have minimal impact on the Cayman Islands, because the rules as they stand now do not require a jurisdiction to change their tax regime or indirect or direct. If you are an indirect tax regime, what is required is to provide more reporting for the entities that are in scope, so that the direct tax regime can assign a top-up tax to make sure that the entity that is in scope pays the 15%, but it doesn't require the Cayman Islands to implement a 15% tax. So once there was clarity around that, which they understood, that's what I mean in the sense of what might have been, well, where we wouldn't want to be is for them to not understand what we mean by indirect tax. But that didn't seem to be the question. They accepted that. What they wanted to know is how that's going to operate in the new landscape, which to me is a sea change.
I guess perhaps it's a misconception, but a lot of people might look at the new 15% tax proposals that are out there on a global scale and say, well, no companies in Cayman pay tax, and you could take that extreme to whether it be a reinsurance fund, whether it be a hedge fund, a private equity fund. So the worry might be that will be imposed upon something that currently is neutral globally, and that the investors pay that, and it will have an additional 15% layer of tax on it. So are those entities out of scope entirely then? Are they? How do we understand how this impacts Cayman?
What you're talking about is in relation to what's called Pillar 2.
Mm-hmm.
Under Pillar 2, investment funds are specifically carved out because the OECD recognizes the principle of tax neutrality. The taxes are paid where they're owed. So there isn't a need for an additional layer of tax because the investments are where they're made, pay that country's tax, and then each investor on their return pay their home country's tax.
So that's therefore a positive then for Cayman, because that keeps that part of the business. But in a reinsurance company setting up in Cayman, could it find itself exposed to new levels of tax, presumably?
I'm not necessarily sure that's going to be true, because in the way the rules are written, they're not just going after any company. It's what they're after are multinational enterprises of over 750 million euros. So many of the companies that are going to be out of scope for that reason, because what those rules are designed at are more so the large internet-based companies.
The Facebooks,
Googles,
Amazons,
the and Amazons.
Who ironically were using jurisdictions in the EU to reduce their tax bills.
That may be so, and that's for those countries to understand.
I said that,
and grapple with. That's for those countries to grapple with. But that is in Cayman's core business.
Yeah.
So that's why we have taken the view that we're happy to cooperate and provide additional information for those entities that are in scope. But because those aren't our primary lines of business, there'll be minimal impact.
There's a lot of reporting that comes from this, although you say there's a few number of companies in Cayman that will be exposed to, but there will be some. How staffed up? How many? Do you need more resources is it the Department of International Tax Cooperation? Does that department need additional resources in order to be able to deliver the reporting that is required on a global scale? How will we actually manage the flow of this information?
Well, that will be determined when they begin to write the rules of how that's going to work, because what you have now is a broad framework. But at the moment, we're already doing a lot of that reporting country by country anyway. Mm-hmm. So what will have to be determined is when the rules are written, what is the additional information that is needed to make that assessment, and then we can adjust resources accordingly. Okay.
But we're just going to take a very short break, and then we're going to come back and rejoin the conversation on Cayman and its financial services sector with Minister Ebanks and Jean DaCosta.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. The Chamber Pension Plan is asking for all members to ensure their member details and contact information is correct and up to date. To review and update member details, simply visit chamberpension.ky. Log into your account and provide the necessary information for your personal profile and for your beneficiaries. For assistance in updating member details, call us at 745-7630 or email admin@pensions.ky. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.
Money Sense, the only personal finance radio show in the Cayman Islands, hosted by Simon Cawdery from the CFA Society Cayman Islands.
This is Money Sense.
Welcome back to Money Sense. We are joined, as we were earlier before the break, with Minister Ebanks and Jean DaCosta, and we're talking about the Cayman Islands and its financial services sector. Before the break, we spent a little bit of time in North America discussing what the US rules and politicians and stakeholders and industry people think of Cayman, maybe we can jump across, go east around the globe and look at where we are in Europe, because historically we've not really had a problem soliciting business from the UK or from the US. Cayman is predominantly US driven from its business activities, but a lot of the vitriol that comes towards Cayman seems to be originating from the EU or from organizations that are supported or sponsored by the EU or operate in the EU. So how's your relationship, and how is the Cayman Islands relationship with the EU in particular then? How have you developed that relationship, and how do you see that continuing?
So let's unpack the question and remind the audience that just like here, the EU has different branches of government. So the EU Commission leads the way in terms of tax policy. The EU Parliament doesn't necessarily have the authority to implement those policy decisions, but they can, just like any parliament, sort of advocate for rules and changes under their system. The EU Commission, I think, from what I've seen, has begun to develop a stronger appreciation for what the Cayman Islands does. And just to put it into context so the audience understands, the Commission is more so the civil servants. They're not the politicians. By and large,
they're appointed by national governments.
Yeah, and they're supported by technocrats here. Mm-hmm. That doesn't mean that they wouldn't be driven by political decisions and considerations, but by and large, who you're engaging with day to day are civil servants. I think from what I've seen, they have developed a stronger appreciation and understanding of the Cayman Islands and what is meant by being an indirect tax jurisdiction that has tax neutral products. Specifically because I think in the past we've sort of engaged when there's an issue, then I think the perception of us was slightly different, that we sort of came around when there was a fire.
As opposed to being proactive, you're saying?
Correct. Whereas under this administration, our approach has been to just go to talk just for talking. Because we're not on the EU's tax list right now. We're on their EU AML list as an automatic consequence of the FATF grey list, which I'm sure you'll come on to. But in that space, it's just to engage and talk and say that these are the legislative initiatives we have going forward. And we just want to disclose and have open and transparent dialogue so that if you're planning anything, come and talk to us so that we can ask questions, understand it, get industry engagement earlier rather than the rules being promulgated and us trying to catch up to them. And I think that sort of approach, I think now there have been 4 trips to Brussels. We have really seen the relationships begin to warm in the sense of not warm as being chummy, but warm in understanding of, okay, this is serious. The jurisdiction is taking our rules seriously, doing its best to adopt them and engaging with us proactively. I also think it's also helped us 2 points. One, to hear what their direction of travel is, which we've asked quite candidly, where is the direction of travel in tax policy on the next 18 to 24 months? You must have a plan, because we future plan. And if you can share those thoughts with us early, then we can begin to think about it rather than trying to race at the last minute. The second thing is, I think it's been helpful. I hear sometimes, or I get some messages that you can have paid lobbyists go over and do this for you. But in my experience, as a former representative and now as a minister, nothing speaks more loudly and more clearly and more persuasively than them having a Caymanian representative in front of them speaking on behalf of their country.
Does that mean we'll have a Brussels office?
We have an appointed Brussels rep, and we're working on having the actual physical premises for similar reasons that I just described.
So there will be some people listening to this, though, who will say it's naive to expect that the EU is going to, it might listen, but many members of the EU, many members of its parliament, many members of national parliaments have said quite openly their target is to make life too difficult for tax neutral jurisdictions to exist in the financial services sector.
Actually, I would edit that. What they say is not tax neutral jurisdictions, this is tax havens.
Which yeah, right. But for them, we use one word, they use another.
Yeah, but the distinction is important. And I think we were able to highlight that distinction when we testified at the EU Parliament. And it was a distinction that I don't think that they had fully appreciated, that I think our presentation and evidence of that drew the distinction in a clear way that maybe, to your point, wouldn't necessarily persuade them in 1 hour, but I think we gave them pause for thought.
So that suggests that we need to spend a lot more time there in order to avoid the bad things that could otherwise happen.
Well, we already are spending significant time there than we have in the past. And I think that is going to be further enhanced by having a representative. But I don't think the public should forget that the Ministry of Financial Services has been engaging with the EU Commission for quite a long time, including through the pandemic over Zoom. In fact, to leave the EU tax list in 2020 was done primarily over Zoom. I took trips as the then representative to the UK and Europe because I was on the ground. But a lot of the technical discussions happened over digital calls. Mm-hmm. So that body of work is happening. Where we haven't necessarily engaged that historically that we've done now is with, which is the point you're coming to, is the EU Parliament. That we accepted their invitation, so to speak, to come along. I think there were a couple of things that flowed from that discussion. Number one, I think that they found it refreshing that we turned up, for starters, to show up and say, right, we'll have the discussion with you. Number two, I think they learned quite a bit based on their questions on camera and their reactions when it was completed off camera. I think they may have had a view that this was some sort of system we contrived deliberately to extract from them, when actually, when you look at a tax-neutral product, it's actually adding for them, either adding in terms of tax revenue in their jurisdictions and potentially adding to their jobs and monies back to their citizens. So our case wasn't that there aren't other maybe systems or countries that you shouldn't be concerned about. Our case was when you look at the Cayman Islands specifically, which is all we can speak on behalf of, there are some fundamental facts that you may have overlooked. And when you look at them in our present light, it should give you pause to think whether or not you have the label of tax haven over us correctly, or whether or not, as we say, we're an indirect tax system that has tax-neutral products which provide you benefits.
An answer, if I might say, based in impeccable logic, but it seems sometimes that what comes out of the EU isn't always based off logic. And I look at, say, the grey list that we're still on for a reason that we hadn't prosecuted anyone for money laundering. And of course, the day that we were told that, someone then got prosecuted for money laundering in the High Court, which was a helpful coincidence, perhaps. But in a jurisdiction such as this, where money doesn't flow through the jurisdiction, to have to prosecute somebody for something that's unlikely to happen, and to have to do many of those in order to get off a list, seems to fly in the face of logic. That's the problem, I guess. People will that's the nervousness people will have with respect to dealing with parties like that. You're trying to behave very responsibly and reasonably, but the other party sticks you on a list because it doesn't like you. So how do we combat that?
Well, let's maybe clarify a few things. The list that I think you're talking about is not an EU list. It's the FATF list. Mm-hmm. So it's not a list in which the EU said we don't like you or put you on there. It's a global standard. And all of the countries have the same examination, so to speak.
But not everyone's treated the same.
Well,
there's lots of money laundering that goes on in the UK and the US and such like.
Not everybody's system is the same, so they can't be treated the same. But what I think is important is each country, for its system and uniqueness, may struggle with particular criteria. The struggle that you're highlighting is that our struggle is for the remaining immediate outcome that we need to satisfy to be delisted, is the country being able to handle what they consider complex money laundering prosecutions. The reason that is different and difficult for a country such as Cayman is because typically the prosecutions don't happen here. We are usually the suppliers of information to prosecutors in other countries, be that whether it's the U.S., there are lots of famous articles and quotes from U.S. prosecutors who have made cases from information that Cayman has supplied. But the FATF's counter to that is, but these are the standards. They apply to all countries. There'll be other countries that struggle with other bits of it. So we can't let people off just because of your unique struggle, because then how do you then maintain the global standard? Fine, fair enough. So we have to deal and play the ball as it lies. As you say, as either fate or the heavens provided,
Or bad luck for that person.
our case has come in.
Yeah.
We don't get to decide that. The police investigate. An allegation comes in. They provide evidence. They provide it to the DPP. The DPP lays a charge. The trial is conducted, and a jury either comes back and says guilty or not guilty. Government's not involved in that. So that your point is based on that standard, how could we possibly be able to tick that box on the examination?
Unless
we
you
never
force
know
the
what's going to
judiciary
happen.
to do something.
But for whatever means, it happened.
Yeah.
And there are now 3 of them. So if you take a step back, in October of last year, there were 2 remaining immediate outcomes. One was beneficial ownership enforcement, and the second, that's IO5. IO7 was in relation to prosecutions. So the goal in October of last year at the plenary leading up to the plenary was to try to ensure that IO5 on beneficial ownership was satisfied, because on that score we felt we had ample evidence to satisfy that, which happened, which was a good thing. Now with the last one remaining, IO7 is broken in 2 parts. Part A is the process I just described of all the way from police investigation to a jury conviction. Part B is the sentencing by the court, because they want to know that the jurisdiction will administer a sanction that they believe is dissuasive. On A, we have at least, I think, 2 to 3 cases that we think fit the profile. So hopefully A is now satisfied. For B to be satisfied, we're waiting on the sentencing.
So what does it have to be, a minimum of 20 years?
So there's a range, and the judiciary has been given judicial education on the sentencing guidelines that they're expected to follow. Without, there would have to be some unusual circumstance for them to have a departure from it. But the point for the listening public is, it's not for the executive arm to call the judiciary and say, hurry up and sentence the person, because that would fall foul of other rules. So when the sentencing occurs, we'll report that to the FATF. So to be able to try to then have the ammunition, as we did in IO5 with the beneficial ownership, to say, we think this is now satisfied based on the complexity of the case and the sanction given, assuming the judiciary stays on the guidance sheet. If that happens, we report that in. I don't know that that's going to happen. All that's going to happen before this February plenary, which the AG and I are going to attend in person. But it may happen, depending on the judiciary, by the June plenary.
The court system in Cayman is notoriously quite slow. It takes time to go through the court system, getting a date and such like. So that could be a problem for us.
I think the court system has to follow its natural course.
Yeah, which yes.
And the pace of it is not necessarily unusual to Cayman.
No.
That's litigation, which is why I never wanted to be a litigator. But the fact of the matter is, we have to let it justice play out.
You wouldn't want to be seen to be influencing
Correct.
the court system.
That's a worse problem. So,
but what is there not a risk, though? Let's assume by the end of this year, in some optimistic scenario, we've satisfied both elements of that. That's playing on the same field that we're currently on. The field can be moved. The rules of the game can be changed and are often changed. Is that a worry for you as we look to the future?
No, because in this circumstance, to leave the gray list, the checklist is specified and defined. This is it.
And there's no, but the rules could change in the future, though. They could add extra requirements.
For every country.
Yes.
Sure. But that's the other takeaway that I've learned from beginning to go to the FATF plenaries in person. So, for whatever reason, not necessarily not just unique to Cayman, in many countries, the political arm does not attend. And I was also hesitant to stick my hand up because I didn't want it to be seen in a form of lobbying, because it wasn't. It's just that you want to advocate on behalf of the country. Once it got clearance from the Attorney General that, no, actually, I think they would like to hear from the chief policymaker that's delegated this responsibility under the Constitution. The other outcome that I learned is not just studying the process and where we are and the likelihood of when we have the best chance to depart from the list, is the point you just made. What also happens at the plenary is not just debating which country is going to come on and off the list. They're also beginning to plan the rules for the next round. Mm-hmm. That's a space that I've told the Chief Officer for Financial Services and the Attorney General, I would like to dedicate a resource that is at the plenary for those reasons.
To be prepared.
To be prepared.
Yeah.
Because what I noticed by looking around the room, and the country should probably take a second to zoom out, this is a room that's maybe 3 times the size of the Ritz Ballroom, with every country in the world that's part of the OECD having a seat at the table. The overseas territories and the Crown dependencies don't have a seat at that table. You have this enormous room with all the nameplates of all the countries, all the largest ones. You'll have a specified time to be able to, because you're not a member of that table, to make your point and make your case. So that the facts that you use have to be the most compelling and most persuasive to know that you're going to satisfy in order to persuade them that it's complete. And there's a whole lot of running process that happens up between them to support that. But that's at the end of the plenary. What I find interesting is the point I just made is the beginning of the plenary, to continue to go and become a fixture in the process, to learn and listen to where the rules might be going, so that we can prepare the country years in advance of where this might be headed and make the adjustments now. When I was in industry, part of the pain points, and Gene can say the same thing, so I want to give him a word so I'm not a mic hog, is when the rules come at the last second and you have to make the turn.
It's an expensive turn for industry.
And also it can be a demanding turn, physically, in terms of resources, not just expense, human hours. But where something was coming down the line that government could tell you 8 to 12 months in advance, you could begin to collaborate with government and think about, okay, I hear the ask, and I see the temptation why you might want to do it that way. You could achieve the same result if we did it this way. That's what we're seeking to achieve, so that we begin to become a fixture in the process, listening to it, and make adjustments earlier rather than more of a scramble at the end.
Very much. I think everyone in industry would very much appreciate additional time to build their systems, build their people, to be able to adjust. And unfortunately, as soon as we think we're halfway through a conversation, time is up on our show. It's amazing how quickly time does pass, and there's so much more that we could talk about. So thank you, Minister Ebanks, for coming in. And Gene, next time we will have you and have posed questions to you of your experiences in the EU and the UK. But thank you very much, both of you, for coming in. It's been a pleasure talking with you and joining us on Money Sense this morning.
Thank you, and I hope to do it again soon.
I very much look forward to that. So finally, before we leave, just to remind you that this show will be on YouTube and will be on LinkedIn as a podcast. Go there, type in Money Sense Cayman, and you'll find the show on YouTube to be viewed. If you have any questions, contacts, do email us at moneysense@candw.ky. With that, it just remains for me to say thank you for tuning in, and please do rejoin us in 2 weeks' time.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. The Chamber Pension Plan is asking for all members to ensure their member details and contact information is correct and up to date. To review and update member details, simply visit chamberpension.ky. Log into your account and provide the necessary information for your personal profile and for your beneficiaries. For assistance in updating member details, call us at 745-7630 or email admin@pensions.ky. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.